Hello and welcome. So I'm on page 18 of your course pack. And so what I want you to do is to pause the lecture video and do these problems on pages 18, 19, and 20, and then come back and then we'll check it together. Okay, thanks so much. Okay, hello and welcome back. So let's look at the first one, number 118. If equity is 300,000 and liabilities are 192, that means assets, as we know, assets equals liabilities plus equity. So those two is 492. Therefore, assets has to equal 492 because of the accounting equation that says that assets equals liabilities plus equity. So the correct answer is D, 492. Creditors' claims on the assets of a company, that's called a liability. Remember, creditors are the people that we owe, and so that would be a liability. Assets created by selling goods and services on credit is called accounts receivable. Now this one may have been hard to get, but we did talk a little bit about it in prior lecture videos in chapter 1. So remember, as I was saying, customer A, let's say customer A sells to, company A sells to customer B. And customer B says, I can't pay you now. What does company A do? Well, they record accounts receivable. So in accounts receivable, think about what this is telling you. I'm waiting to receive cash. That's what this is telling you. So accounts receivable is an asset, and it's created by selling goods and services on credit. What does that mean, on credit? That means that company A sells to customer B. Customer B says to company A, thanks, I'd love to buy this product, but I can't pay you now. Company A says, okay, that's fine. You can pay us back in 2 months. Company A can still record the revenue because of the revenue recognition principle because they earn the revenue, but they haven't received cash at the time of sale. They'll receive cash in 2 months when customer B pays them, but they can still record the revenue. So they can't increase cash because they haven't been paid cash yet. But what they do is they increase accounts receivable and then they increase revenue. So the way that this keeps the accounting equation in balance, assets equals liabilities plus equity, is that assets go up because accounts receivable goes up and equity goes up because revenues go up. Okay? Number 135, our photometer company paid off $30,000 of its accounts payable in cash. What would be the effect in terms of the accounting equation? We'll write that out. Remember, assets equals liabilities plus equity. So it paid off accounts payable. Where do we put accounts payable? That's a liability. So liabilities are going down by $30,000, right? Liabilities are going down by $30,000 right there. And I'm paying that off with cash. Cash is an asset. So cash is going down by $30,000, which is my asset. So my assets are going down by $30,000, and then my liabilities are going down by $30,000. The left side of my accounting equation is going down by $30,000. The right side is going down, the liabilities plus equity side, the right side is going down by $30,000 because liabilities are going down. Why are liabilities going down? Because I'm paying off the accounts payable. I don't have it anymore. So the right answer is B, assets decrease by $30,000, liabilities decrease by $30,000. There is no effect at all on equity. Okay? Look at 139. If the liabilities of a business increase by $75,000 and owner's equity decreased by $30,000, then the right answer is D, assets increased by $45,000. Let's talk about why that is. Well, liabilities go up by 75, and then equity goes down by 30,000. That means the right side, liabilities plus equity, increased net of 45, which is the 75 minus the 30. So the right side of the accounting equation went up by $45,000 net, the 75 minus the 30. That means the left side of the accounting equation, the asset side, also has to go up by 45,000. How else could you choose this? You could just choose some numbers. You could say assets are 100,000, liabilities are 50, equity is 50. Okay? Then you can back in to figure it out. You can say, well, liabilities increased by 75, so 50 plus 75 means new liabilities are 125. Owner's equity decreased 30. It was 50. Now it's 20. So that means liabilities plus equity has to equal total assets. So 125 plus 20 equals 145, which is now my total assets. It was 100. Now it's 145. It increased by 45,000. So whenever you have a problem like this and you're a little bit confused, you can just plug in some numbers to see how it works out. Okay. 162, determine the net income of a company. So we have employee salaries expense of 180, interest expense of 10, rent expense of 20, and consulting revenue of 400,000. So you take your consulting revenue of 400,000 minus your employee salaries of 180, minus the interest expense of 10,000, minus 20,000 rent expense, and that gives you the correct answer, which is A, $190,000 is net income. Then the last one, Viscount Company collected $42,000 on its accounts receivable. Okay, so there we go. Now it's coming back into focus. Sorry about that. On its accounts receivable, the effect is what? So I'm going to write out the accounting equation. Assets equals liabilities plus equity. So what's happening? I'm collecting cash. So cash is going up by $42,000 on its accounts receivable. So basically what happened is a customer paid us. So we made a sale maybe 2 months ago, and then when we record the sale, we said accounts receivable going up, revenue going up, which means equity goes up. That's what we did 2 months ago, or whenever we made the sale. Now the customer is paying us. So what's happening? Cash is going up by $42,000. But our customers paid us. We no longer have that outstanding accounts receivable. We're not waiting to receive cash anymore. So we don't have a receivable. So accounts receivable, AR, accounts receivable, is going down by $42,000. So one asset, cash, is going up. Another asset, accounts receivable, is going down by $42,000. They net out. So that means total assets, total liabilities, and equity will be unchanged. The total assets, but the composition of the assets does change. I have more cash and less accounts receivable, but still C is the correct answer. Okay? All right, well, I hope you got all those right. And thank you so much. And this is the end of this lecture video, end of our Chapter 1 lecture videos. Thank you so much.